thanks for watching my daily market report today. My name is Mike, and this market report is about what drives mortgage rates on a daily basis, what goes into impacting them, and different trends that kind of go into it. We don't get into rate quotes or anything like that. That could be a whole entire different video, but plenty of other sites for that. There's just too many variables that go into pricing a rate sheet a rate for people. So if you guys need that, I am a loan officer. I do work with the national lender. Please feel free to reach out. We can work on rate quotes for you if you like one. If you're looking for got information on rates, you got information on if you're looking for information on mortgage programs, or if you're looking to get pre-approved or refinance, please feel free to reach out. We can certainly talk about that. But in the meantime, let's jump right into this. We got today a big data being released on the economic report, and we'll just look into it right now. We'll start with the non-farm payrolls, which is the big one here, brought to you by the BLS, or Bureau of Labor Statistics, for the month of April. The previous month in March initially came out 916,000 new job creations, but however that got revised lower down to 770,000. They're expecting almost a million new jobs for this month for April, and it came in at a very disappointing 266,000. That's a huge miss, which I think a lot of people did not anticipate. That brought the unemployment rate from 6%, which they expected to go down again to 5.8, upwards to 6.1%. So obviously that is a huge miss, and we'll touch base in a minute what how the market's reacting to it, but we'll also touch base on average earnings month over month. So the previous month in March it dropped by 0.1%. However, April is expected to be no change, and it actually jumped upwards 0.7. A lot of this is basically trying to entice people to come back to the office. We got a lot of people on unemployment. Employers are looking for ways to bring people back, and well, more pay and some other different other methods of trying to get people back. They're trying to implement. We also got work weeks went up. We went from 34.9, which was expected to be unchanged, to 35. And last but not least, we got wholesale inventories month over month. So back in February, it went up 1.4% month over month. They figured that would continue that same pace at 1.4% in March, and it went up 1.3%. So within range here. But of course, the big thing is the jobs data, and that came in very, very, very disappointing, obviously. So let's jump ahead, see how markets are reacting to it. Stocks are actually up. If you would expect, you would think that the stocks would be down. However, they're kind of viewing bad news as good news today. We do got a few Fed speakers out there. Neil Kashkari, one of the Fed members, did kind of reiterate to basically all those people who are criticizing the Fed for tapering or rate hikes based on forecasts, that basically this huge miss in the jobs data is a good reminder that we're looking at outcomes, not forecasts. And this is one reason why we need to kind of be patient and be accommodative to try and get the jobs back into the economy versus just worrying about what's the forecast out there. So now investors, of course, are kind of rethinking, like maybe their forecasts aren't exactly accurate, that maybe things won't heat up as fast as they thought it might. And so we'll have to kind of wait and see. So there'll be some changes probably coming here very soon in the different thought process of where things will be. Let's jump to see how this is affecting mortgage rates. And mortgage rates were greatly improving. We touched up. We're right here about the 100-day moving average. As you saw, we're way up even further, but we have scaled back a little bit. Of course, that is, a little too much too fast, but this gives you an idea. That huge miss could help us even further. That could propel us even further. It could be the catalyst to give us a little bit more juice, and it's a run upwards. Again, we're here about the 100-day moving average. We're currently up about 13 basis points. So you should see better pricing today versus what we saw at yesterday's close. And as you saw yesterday, we were right in this range, and we shot up. So yesterday, we had some improvement. So again, this is working slowly but surely. We're getting some steady improvement in mortgage rates again. Yields, as you see here, look at that. We dropped below 150 for the first time in quite some time here, probably since January or so. And of course, it did pull back a bit. We're just below 1.56 right now at 1.556. But it was testing these two floors of support right here, and that gives you an idea that we could see some more testing in the near future here, especially if we keep getting more data that that disappoints, which be bad news could become again good news here. All right, so that's pretty much the wrap. Mortgage rates are improved today from what we saw, and if you guys got any further questions or um, anything else we can do for you, please feel free to reach out. Otherwise, you guys have a great rest of your weekend. Enjoy your day, and we'll see you on Monday's video. Thanks for watching. Bye bye.